On April 9, 2025, President Donald Trump stood before the nation and announced a staggering 125% tariff on all Chinese imports, a decision that has reverberated across continents, rattling financial markets, upending supply chains, and sparking fierce debate. This isn't a minor adjustment, it's a seismic shift, a bold and unapologetic declaration of economic warfare aimed at reshaping America's trade landscape. The stakes couldn't be higher, with implications stretching from factory floors in Shenzhen to shopping malls in Ohio, from Wall Street trading desks to diplomatic halls in Beijing. To grasp the gravity of Trump's 125% tariffs, we must first rewind the clock. The US and China have been economic titans locked in a complex, often contentious relationship for decades. By the late 1990s, China's rapid industrialization and low-cost manufacturing made it a global workshop, exporting everything from toys to electronics. Its 2001 entry into the World Trade Organization supercharged this trend, flooding U.S. markets with affordable goods. By 2024, U.S. imports from China reached $438.9 billion, according to the United States Trade Representative, while exports to China totaled $143.5 billion, portraying economics, a persistent imbalance fueling political firestorms. Tensions simmered for years. American leaders accused China of unfair practices, intellectual property theft, state subsidies, and currency manipulation. The first Trump administration, starting in 2018, ignited the trade war with tariffs on over $350 billion of Chinese goods, targeting steel, aluminum, and consumer products. China retaliated, slapping duties on U.S. exports like soybeans, pork, and machinery. Blows fell hard in America's heartland. A tenuous truce came with the 2020 Phase 1 deal, where China pledged to buy more U.S. goods, but compliance faltered. The Biden years maintained most tariffs, even adding new ones in 2024 on electric vehicles and semiconductors, citing national security. Enter 2025. Trump's return to power revived his America First crusade with a vengeance. Building on April 2's 54% reciprocal tariffs, 20% base plus 34% to match China's duties, he dropped the 125% bombshell on April 9th. It's a response to a $1.2 trillion goods deficit in 2024, per Statista, and a belief that China's economic dominance threatens U.S. sovereignty. This isn't just escalation, it's a full-on assault on the status quo, rooted in decades of trade friction. So what exactly went down on April 9, 2025? Picture this: President Trump, flanked by advisors in the Rose Garden, invoked the International Emergency Economic Powers Act, declaring a national emergency to justify a 125% tariff on every single Chinese import. The Wall Street Journal dubbed it the highest tariff ever imposed by a U.S. president on one nation. This obliterates the earlier 54% rate, 20% from prior tariffs plus 34% reciprocal duties announced April 2nd, shifting from targeted strikes to a blanket barrage. Axios reported stock futures plunging as the words left his mouth. The scope is staggering. Unlike past tariffs hitting specific sectors like solar panels or washing machines, this covers everything: smartphones, clothing, furniture, industrial machinery. $438.9 billion in 2024 imports, per the United States Trade Representative. Tech giants like Apple, assembling iPhones in China, face a nightmare. Retailers like Walmart, sourcing billions in cheap goods, scramble. The Tax Foundation estimates this could raise $206.6 billion in revenue if imports hold, but that's a big if. Key products, think $1,000 iPhones or $20 jeans, now carry a tariff pushing costs sky high. Implementation was instant. No phase-in, no grace period. Tariffs hit at midnight April 9th, as Markets Insider noted. The White House framed it as a national security imperative, aiming to reshore jobs and gut the trade deficit. Exceptions exist for Canada and Mexico under the USMCA, but China's on its own. Businesses panic. Supply chains built over decades now face a wrecking ball. It's a gamble: force economic realignment or trigger chaos. China didn't blink. By dusk on April 9th, Beijing unleashed a ferocious counterattack. The State Council Tariff Commission slapped an additional 34% tariff on all U.S. goods, pushing the average rate to 50% with existing levies, per Reuters. This targets $143.5 billion in 2024 exports: soybeans from Iowa, oil from Texas, machinery from the Rust Belt. Axios called it massive retaliation, a direct hit at Trump's base. But tariffs were just the start. China flexed harder. Export controls tightened on 7 rare earth metals, vital for semiconductors and military tech, echoing April 4's moves. Anti-dumping probes targeted U.S. medical equipment, while firms like DuPont faced monopoly scrutiny. The finance ministry labeled Trump's tariffs unilateral bullying, vowing to safeguard China's core interests, per The Guardian. State media rallied citizens, framing it as a fight against Western arrogance. Beijing's strategy goes beyond tit-for-tat. Markets Insider reports China's aiming to cripple U.S. agriculture. Soybean exports, $14 billion in 2024, could have. Energy exports, like LNG, face the same fate. Meanwhile, China courts allies, offering trade stability to the EU, South Korea, and ASEAN, per The Washington Post. It's a multi-front war. Hurt the U.S., rally the world, and endure the storm. Xi Jinping's message is clear. China won't bend, it'll break the game. U.S. GDP could shrink 0.8% long-term, with China's retaliation adding a 0.1% hit, per their models. Consumers face higher prices. Think 20% more for electronics, per Statista. China's pain cuts deeper. Exports to the U.S., 2.3% of its GDP, are lifeline revenue, $438.9 billion in 2024. The size estimates a 2.4% GDP drop in 2025 from tariffs alone, worse if global demand falters. Goldman Sachs forecasts growth slowing to 4.5% from 4.9%, even with stimulus pumping billions into infrastructure. The Economist Intelligence Unit warned a 60% tariff could have cut growth by 2.5 points over 3 years. 125% might be apocalyptic. Think 3 to 4% shaved off long-term. China's export sectors teeter. Tech firms like Huawei, already hobbled by U.S. bans, lose what's left of their American market. Textiles and toys, employing millions in Guangdong, face collapse. Size predicts hundreds of thousands of job losses in coastal factories. Some peg it at 1 to 2 million if exports drop 30%. Export-driven growth, 70% of 2024's GDP rise per Goldman Sachs, stalls. Beijing's stimulus, $500 billion in 2025 per Reuters, might cushion this, but not fully. U.S. winners? Domestic manufacturers, if they can scale. Steel firms like Nucor or textile plants in the Carolinas could thrive, but labor shortages and higher costs loom, per Axios. Consumers bear the brunt. Price hikes hit wallets hard. China's workers face unemployment. America's face inflation. It's a brutal trade-off. Politically, Trump's betting big. America First galvanizes voters. Factories reopening in Ohio could cement 2026 wins. But price hikes, 20% on phones, 30% on clothes, might sour that by midterms, per Axios. In China, she leverages the clash for nationalism, per The Guardian. State TV paints the U.S. as a bully. Citizens rally. Yet economic woes, job losses, slowing growth, test his iron grip. Future talks? Possible. Trump loves deals, but China's dug in, per The Guardian. A prolonged standoff looms. U.S. could hike tariffs further. China might weaponize rare earths or currency. Markets might force a thaw, but for now, both double down. The U.S. risks isolation. China, stagnation. Global power shifts hang in the balance.